Hello students, how are you all? I hope you are doing well. In this lecture, we are going to discuss bank reconciliation statement revision students. This chapter is very important from examination point of view as well as practical point of view also. Now, without wasting much time, we enter into the concept. Before discussing bank reconciliation statement, let us discuss about accounting cycle once. Accounting cycle once. This concept you know very well. See, accounting cycle is a sequence of steps to prepare the financial statements of the business to know the profit or loss and financial position of the business. Now, first, what is the first step involved in the accounting process? We should identify the transactions and events and we have to analyze them. That is the first step involved. Yes or no, students? First step. Next, the identified the transactions are recorded into the journal. That is the second step. Next one, the journal entries are posted into ledger. That is the next step. The ledger accounts are now balanced, and all these balances, with all these balances, we prepare a trial balance to check the arithmetical accuracy. Now, at the end of the year, we prepare adjusting entries for outstanding expenses, accrued incomes, and incomes received in advance, and prepaid expenses, depreciation, and provision for doubtful debts. For all these things, we prepare adjusting entries. After preparing adjusting entries, we again prepare a trial balance that is called adjusted trial balance. Before adjusting entries, we have a trial balance that is unadjusted trial balance. After adjusting entries, we prepare again the trial balance that is adjusted trial balance. After adjusted trial balance, now we start preparing financial statements. So to prepare the financial statement, we should pass the closing entries. Why? Because at the end of the year, all nominal accounts are closed by transferring to trading or P&L account. Yes or no? After preparing closing entries, now we prepare the post closing trial balance. See, once all nominal accounts are closed, now the trial balance consists of assets, liabilities information, and profit information, and some personal accounts. With this, all financial statements are completed for the year. Now, whatever the adjusting entries we have recorded at the end of the year, they become reverse at the beginning of the year. Now, again, we start doing the same process for the next financial year. Yes or no, students? Yes. So, this is our accounting cycle. You may ask, sir, what is the necessity of knowing accounting cycle at this level? Yes. If you observe, students, in our accounting, we have learnt basic chapters like journal, ledger, trial balance, and financial statements. Yes or no? Now, in that accounting cycle, here it is journal, ledger, trial balance, and adjusting entries. In this accounting cycle, will you find the concept of BRS? In this accounting cycle, will you find the concept of BRS? No. Then, why we are learning this BRS chapter? That is a question mark. Yes or no, students? So, here we try to understand the logic behind preparation of BRS because it is not part of bookkeeping or accounting. Then why we are learning this chapter in the accounting subject? Yes or no? This is the doubt so many students will have. Now, to understand this, let us take one example, students. Let us take one example. Look at. So if you can understand this example very well, then you can understand the concept of or the logic behind preparation of bank reconciliation statement. Look at. There are two persons, Mr. Amar and Mr. Varun. There is no relationship between Amar and Varun now, but Amar sold goods. Amar sold goods to Varun on credit for 1 lakh. Here the relationship exists now. What is the relationship here? Amar seller, Varun buyer. Next one. Amar sold goods to Varun on credit basis. Yes. Now the relationship exists now. Debtor and creditor relationship. Debtor and creditor relationship. Amar is creditor and Varun is debtor. Now, goods sold on credit for 1 lakh. This entry is recorded in Arun books at the same Amar books at the same time Varun books. Look at what is the entry Amar will record. Varun account debit 1 lakh to sales account. What is the entry that Varun records? Purchases account debit to Amar account. Same transaction. Sold goods by Amar. This becomes sales for Amar and purchases for Varun. Yes or no? Now the same transaction is recorded same transaction is recorded by both the parties. Same transaction is recorded by both the parties. Yes or no, students? Yes. Next one, but quite opposite in nature. If you observe, Amar books we debited Varun account, and Varun books we credited Amar account. Try to understand this basic difference. Next transaction, cash paid 50,000 rupees. Now Varun paid 50,000 rupees cash. This becomes payment for Varun and receipt for Amar. Payment for Varun and receipt for Amar. What is the entry they record? First, it is recorded by Varun because Varun is paying now. So, what is the entry? Amar account debit 50,000 to cash. Now, Amar is receiving cash. Yes. What is the entry he will record? Cash or bank account debit to Varun account. Again, if you observe here, Varun account is credited. In Varun books, Amar account is debited. Observe these small differences first. Next one, goods returned. Goods returned by Varun rupees 2000. Goods returned by Varun rupees 2000. What is the entry Varun records? For Varun, these are purchase returns. For Amar, the same goods are sales returns. Now, Varun records the entry Amar account debit to returns outward account. Amar records the entry returns inward account debit to Varun account. Yes or no, students? So, try to understand these three transactions. These three transactions are recorded by Amar in his books, Varun in his books. Yes or no? Yes. Amount is same? Yes. Transaction same? Yes. For Amar, it is sales. For Varun, it is purchase. For Amar, it is receipt. For Varun, it is payment. For Amar, it is sales returns. For Varun, it is purchase returns. Do remember, students. Now, both the people will prepare ledger accounts. Both the people will prepare ledger accounts. Observe carefully. Amar prepare Varun account. Varun prepare Amar account. Varun prepare Amar account. Is it clear? Now look at. When Amar is debiting 1 lakh, Varun credited 1 lakh. When Amar credited 50,000 and 2,000, Varun debited 50,000 and 2,000. Same amount, there is no change. Same amount, there is no change. Now, after balancing, you balance in the books of Amar. In the books of Amar, debit balance 48,000. Next. In the books of Varun, credit balance 48,000. Observe, 48,000, same balance they got. Balance is same, but quite opposite in nature. In the books of Amar, it is showing debit balance. In the books of Varun, it is showing credit balance, but amount is same, 48,000. So, what is your observation? Observe carefully. When one transaction is recorded by both the parties from their point of view, the ultimate balance of the account will become same. The ultimate balance of the account will become same, 48,000. Now, if Amar sees Varun account, it shows 48,000 debit balance. That means Amar has to receive amount from Varun. If Varun sees his books, it shows that Varun has to pay amount to Amar 48,000. So, in one person books it is debit balance, in the other person's books it is credit balance, but same amount. Yes or no? This is possible. When all the transactions are recorded by both the parties from their point of view without any mistake. So, if both the parties records all the transaction, this is the position. Suppose Amar did not write the entry for sales returns. Varun has written, but Amar has not written. Varun has written, but Amar has not written. Yes or no, students? Observe carefully. Observe carefully. Now, there is no entry for sales returns in Amar books. At the same time, there is no posting. There is no posting. Now look at, in that case, in that case, what is the balance in the Amar books? It shows some 50,000 rupees balance. It shows 50,000 rupees balance. Yes or no, students? Yes. Now tell me, in the Amar books, how much balance is showing? 50,000. But in the Varun books, it is showing 48,000 balance. Now there is a difference. Actually, when all the transactions are recorded by both the parties, they should get the equal balance, equal amount. But in the Amar books, it is showing 50,000 balance. In the Varun books, it is showing 48,000 balance. Now there is a difference. There is a difference, and there is a conflict between Amar and Varun. Yes or no? Amar and Varun. Yes or no, students? Yes. In this case, what is the remedy for this? Now, when Amar asked Varun, Varun, you have to pay me 50,000 rupees. But in the Varun books, how much it is showing? 48,000 rupees. Now Varun says, no, no, Amar, in my books, it is showing 48,000. Amar says, no, no, Mr. Varun, it is 50,000 rupees balance. Now there is a conflict between these two people. Now what Varun will do? Look at what Varun will do. Varun will ask a copy of his account, a copy of his account in the Amar books, a copy of his account in the Amar books. Okay, Amar, don't worry. Are you maintaining my account in your books? Yes, you are maintaining. Na? So just give me a copy of my account. What is that? Varun account. Varun is also maintaining Amar account? Yes. Now, Varun will compare these two accounts. Varun will compare these two accounts, whether the transaction which I have recorded by Amar or not. Now look at how he compare. Look at, now he starts comparing. He starts comparing. Observe. Yeah, Varun recorded 1 lakh on the credit side. Amar should record the same on the debit side. Yes, because for us it is purchases, for him it is sales. Next, Amar recorded debit side 50,000. So the same is recorded by Varun, credit side 50,000. Amar recorded purchase returns 2,000. The same should be recorded by, sorry, Varun recorded 2,000 rupees purchase returns. The same must be recorded by Varun, by Arun on the credit side. But where is the entry? Where is the entry? Try to understand. There is no entry. What happened here? Here, one transaction is recorded by one party, but the same is not recorded by other party. So automatically there is a difference in the balance. There is a difference in the balance. Yes or no, students? Now Varun informs Amar, Mr. Amar, you forgot to record the transaction of purchase returns. For me, purchase returns, for you, sales returns. You record it first, so that your balance and the balance as per your books and balance as per my books becomes equal. Becomes equal. Yes or no? So this will happen. This will happen, students. Now, sir, this example related to BRS? Yes, students. Yes. Here the parties are Arun and Varun, debtor and creditor, the relation seller and buyer. Now visualize or imagine these two parties are bank and its customer. Bank and its customer. The customer of bank will deal with the bank in so many transactions. So many transactions. Now look at here. What are the various transactions between bank and its customer? Means cash deposited in bank, cash withdrawn from bank, checks deposited in bank, dishonor of deposited checks, checks issued, dishonor of checks issued, direct deposit by our debtor or customer, bills receivable discounted, bills receivable dishonored, bills discounted or dishonored. Next, bills collected by bank on behalf of customer. Next, amount collected by bank according to standing instruction given by customer. Next, direct payments made by customer to third parties. Next, bank charges levied by bank, interest debited by bank. These are the various transactions between bank and its customer. Now, whenever a transaction happened, both the parties must record the entry. So here, bank will record the entry in bank books. Customer also records the entry in cash book. Yes or no, students? Yeah. Customer will record the entries in cash book. Customer will record the entries in cash book. Bank will record the entries in passbook. Yes or no? So bank will maintain customer account. Customer will maintain bank account. So whenever transaction happened between bank and customer, bank also record the entry, customer also records the entry. What happens? So suppose if I have deposited 1 lakh rupee in the bank, in my cash book I will show the entry of 1 lakh. Bank also shows the entry of 1 lakh. Yes or no, students? Yes. Suppose after all transactions, after recording all the transaction, my cash book balance must be equal to passbook balance or bank statement or bank statement. What if these two balances are not equal? These two balances are not equal. In that case, the concept of bank reconciliation comes into existence. Why? Because I have deposited 1 lakh now. So my as per my cash book, the balance is 1 lakh, and my bank statement or passbook also must show 1 lakh rupee. If it is not showing 1 lakh rupee, it is showing some other balance, then there is a difference between my cash book balance and passbook balance. When there is a difference in the balances, compulsorily we should verify, reconcile. Here the technical word is reconcile. We have to reconcile the cash book and passbook. After reconciling, we have to identify the reason, as we have identified in case of Amar and Varun. Amar has not recorded sales returns. In the same manner, here we identify which transactions are not recorded by bank, at the same time which transactions are not recorded in the cash book. By comparing these two statements, now we get the differences. Why this difference of balance? Now all these differences we present in a neat manner, that is nothing but bank reconciliation statement. After reconciling bank statement and cash book, we identify the reasons. All those reasons we present in a neat manner. With that we get cash book balance. So cash book balance 1 lakh we have, and passbook balance, let us say 50,000. Why this difference? Cash book balance 1 lakh, passbook balance 50,000. Why this difference of 50,000? For this difference, what are the reasons? We identify, and that is the concept of bank reconciliation statement. So bank reconciliation statement is nothing but it is a technique of identifying the differences, the causes of for the difference of cash book balance and passbook balance. Bank balance as per cash book and bank balance as per passbook. This is the logic behind preparation of bank reconciliation statement, students.